welcome everyone to our webinar today, Navigating PPP Forgiveness with our... Here's the mail. Give me one moment. We'll be done with the barking portion of our program shortly. There we go. I knew it. For folks who joined more recently, I said at the beginning of the call, I see the mail truck, the mail's gonna come, Harley's gonna go crazy. I apologize. So now I get to apologize in person to you all. Can you come over here, please? We're done. We're done with that part now. So we are having our webinar today, Navigating PPP Forgiveness, with our friends from the Massachusetts District Office of the SBA, Caroline Williams and Dan Martinello. Thank you so much for joining us today. And to the participants, we have a Q&A box. If you scroll down to the bottom of your screen, you can see the Q&A. So if you have any questions as we go through the webinar, you can pop your questions in there. They'll be addressed at the end. So the questions are not going to be addressed as we go through, just because it's possible that the topic is going to be addressed during the presentation anyway, but at the end, Caroline and Dan are going to go through the Q&A questions and answer them. So thank you so much again for being with us today, and I'll pass the torch to Caroline and Dan now.
All right, I guess I'll go first here. Thank you so much for having us today. This is really exciting, and I'm excited to work with you guys. I am Caroline Williams. I'm an outreach and marketing specialist with the Massachusetts District Office. I'm still new to the Boston area. I moved here in May from Florida. I live in Alston. I have my cat I would show you, but he's not as friendly as the dog, unfortunately. I am happy to be here. I'm excited to help excited to help small businesses all over Massachusetts, and I think this is going to be good.
Awesome. Hey, and I'm Dan Martinello. I'm Caroline's colleague here at the Massachusetts District Office. I work as a lender relations specialist, so I'm on the lending team with a few other colleagues of mine. And, I just want to, thank everybody for taking the time out of their day to, come on and join. I know this is a really hot topic, an important topic, but I really can't, I appreciate the resilience, you as small business owners have had during this whole time. I know it's not easy for any of you. I know it's still, everybody's still going through all of the issues that COVID has brought, along the way, but hopefully we can provide you with some solid information today that you can, take back with you and assess and figure out that next step for your business, especially with the Paycheck Protection Program, forgiveness process. And, just so myself, Caroline, our other colleagues at the office, we're always available. We're a phone call away, an email away. So anytime you have a question, night or day, we're here to answer that. So, just keep that in mind. You'll see on our slideshow presentation, our contact information is there. So we're always more than happy to help out, our small business community. So let me, just bear with me 1 second, and I'm just gonna share the screen so we can pull up the presentation. And hopefully everybody can see that. All right. So like I said, today our contact information is right here on the first slide. And just so you're aware, if you're listening in today, we're going to make this presentation available to the chamber so they can disperse that after. So you don't have to worry about, writing down a ton of notes or anything like that. We'll make sure all this information is handed out to you. And everything that we're providing you today is directly on treasury.gov or SBA.gov. That is an important aspect of where do you collect your information for these programs. And I highly, highly encourage anybody that is wanting information on the government debt relief program, such as the Paycheck Protection Program or your Economic Injury Disaster Loan Program, please utilize SBA.gov or treasury.gov for that information. All right, so the first slide, I just want to go over. So with the Paycheck Protection Program, it started back in April, and I'm sure most of you know that by now. The application process, right now there's no more applications being taken, even though at the end of the application process, there was still about $100 or so billion left in that program. So right now, I'm sure Congress is probably working on trying to figure out a way to get that money dispersed out to the small business community. So that's one thing that you want to just stay tuned. Whatever news channel you listen to or source of media, I'm sure we'll be hearing about that additional funds in the future. So just keep that in mind. But with that said, there was a lot of changes to the Paycheck Protection Program from when it started in April to now. So I was saying a little bit earlier, right before we started the presentation, I think when it came to rule changes, there was about 23 rule changes from April all the way through August. So that's a lot, and it's a lot for a small business to soak in. It's a lot for our lending partners, to kind of understand, and our resource partners and the chambers and other organizations helping out small businesses. But, one of the biggest changes happened in early June. So on June 5th was signed the Paycheck Protection Program Flexibility Act. So basically what that did was allowed a little bit more flexibility on some of the program requirements that the small business had to attain to be given full forgiveness on the loan. So a couple key points that I want to show on this slide here is initially the Paycheck Protection Program, you as the borrower had to spend at least 75% of those proceeds on eligible payroll costs. Now that's down to 60%. Also, with that 60%, that's just the minimum threshold. So that doesn't mean you can't spend more than 60%, but that's just your minimum benchmark. Also, to elaborate on that as well, is even if you don't hit the 60% benchmark, that does not mean you're not going to be totally not forgiven on the loan. So let's say you hit only 59%. What happens is the SBA, when you actually submit your forgiveness application, they'll prorate the amount of forgiveness based on if you hit 60% or not. So if you hit 59%, 58%, your loan won't totally be forgiven, but it still will be partially forgiven. So just keep that in mind. You're not going to be asked to owe the full amount. Also, too, what the Flexibility Act did was extended the deferral period from when borrowers have to start making payments on whatever amount is not forgiven. So it was initially, I think, 6 months from the day the loans were dispersed initially. Now it's 10 months from the day your covered period ends. So there's 2 different covered periods now as well. So you can either elect to keep an 8-week covered period. So this is the time frame where you have to utilize the funds. And that was what initially the program had. Also, now there's a 24-week covered period. So you can extend out your covered period in the time frame you have to utilize your funds, make sure you fall under different safe harbors and things like that. With the covered period, that's not something you have to let your lender know. That's just something you as the business owner make that decision on your own. So when it comes time for you to apply for forgiveness, that's a question that's just asked on your application. So you'll need to let your lender know at that point. But during the actual process, when you're utilizing funds, you don't have to let your lender know, what covered period you elected to use. Also, too, if you applied for the PPP loan from June 5th or after, the Flexibility Act also extended the maturity period of the loan. So anybody before June 5th was on a 2-year term. Anybody June 5th or after is on a 5-year term automatically. For businesses that are under the 2-year term, you can talk to your lender and request that your loan be transitioned into a 5-year term if you end up with any amount that's not forgiven. However, that is a case by case, and that is a lender decision. So that's not something that just because you act, it has to be a mutual agreement between the lender you used and the business. So, just keep that in mind. And then, as far as the interest rates go, it's the same across the board for everybody. The interest rate is at 1%. And another thing that the Flexibility Act also put in place was updated safe harbors that basically allow you as a small business, if you fit under those safe harbors, you can utilize the easy format application, and also you can apply for full forgiveness if you fall under those safe harbors. And I'll go over the safe harbors on the next few slides. So this slide here is just a screenshot of what the application looks like. So we technically have two applications. We have the forgiveness application, which is Form 3508, and then we have the easy forgiveness application, which is Form 3508EZ. And each application has their own instructions. Where you can find those instructions, again, go to sba.gov or treasury.gov. Those are the only two places you really should be looking for those instructions, or if you get them sent by me or Caroline or someone from our team. So, with that said, the SBA is, with the incorporation of the easy application, we figure that probably 80% or more of small businesses who have the PPP loan should fall under the easy application. And that's a great benefit to all of you, because it's a much more streamlined format, easier application to understand, whereas the forgiveness application was that initial very long formatted application that originally came out, I think, back in May. I think Congress and the government in general heard the voices of the lenders and the small businesses, and really understood that we needed to make this an easier process on the back end for small businesses. So that's where that easy application comes into play. So as far as who can utilize the easy application, if you actually look on the instructions, there's going to be about 3 bullets up at the top. And basically, if you can check off one of those bullets, you should be able to use the easy application. And the bullets are listed here in this slide. So if you're a self-employed individual, you're an independent contractor, you're a sole proprietor with no employees, just go ahead and use the easy application. You're covered. Utilize that easy application. Also, this is where the safe harbors come into play. So if you fall under one of the few safe harbors, you can also utilize the easy application. So, safe harbors are there basically, there's a twofold to it. So as you see here, you have the borrower didn't reduce, annual salary wages of any employees by more than 25% during the covered period, or your alternative covered period that you used, compared to the time frame of January 1st of this year to March 31st of this year. So that's one aspect of it. And when I say didn't reduce their annual salaries more than 25%, we're not including anybody that you had to reduce their salary more than 25% because of the program requirements. So when you applied for that PPP loan, if most of you recall, everybody had to, any employee that made $100,000 or more had to be reduced to $100,000. So, you're not going to factor in that employee because that was a program requirement. So we're not going to ding you for something that the SBA required as part of the program. This would just be anybody else. And then also the safe harbor. So if you can just answer yes to one of these, you can utilize the easy application. So the borrower did not, reduce the number of employees, the average paid hours between January 1st, 2020 to the end of the covered period. But with that said, there's a lot that you can explain if that's the case, especially when it comes to reducing hours and things like that, because, as we all know, COVID has brought a lot of issues with different employees. I myself, I'm a parent. I know I got my sons in school right now, and we're lucky that my wife's at home and can help with the online schooling, but that not everybody has that same convenience. So You may have had to have reduced an employee's hours based on their needs, their family needs, and that's okay as long as you retain records of that. You can still be forgiven. You're not gonna be dinged for things like that. And another part of the safe harbor is if you can answer to this, your borrower you as the borrower weren't able to operate during your covered period at the same level as you were before, basically the period of February 15th, 2020, due to different like CDC requirements and government requirements. And that is a big key, because I feel most small businesses probably fall under that part too. If they can't say yes to the first bullet, you could probably say yes, because I feel with all the health restrictions, CDC requirements, things like that, I don't see too many businesses that applied for PPP forgiveness that are able, even right now, able to operate at the same capacity they were prior to the pandemic. So, and that's why we're anticipating so many people to utilize this application. So here's just, again, it's a quick example of what the forgiveness application looks like. So you have your two parts. You're basically just detailing, the amounts you used, if you received any economic injury disaster loan advance or a grant. Some people will call it a grant advance. There's a couple of different, verbiage uses that were out there in the media, and how you pay to your employees, and then just your simple calculations, as the breakdown of how you utilize those funds, both for eligible payroll costs and non-payroll costs. And then the second part is very important, because that is you as the small business owner certifying to all of this information. So as you recall, back during the application process to get the funds, you had to certify as a business owner on a lot of different aspects, like as far as the tax information or the payroll information that you're giving your lender is truthful. Because what's different about this loan program compared to what a lot of SBA programs entail, there's a lot of paperwork, there's a lot of checking that goes on behind the scenes when a lender provides a loan, whether it's a conventional loan or an SBA loan. So usually, they're verifying taxes with the IRS, they're checking your credit scores and things like that. With the PPP, none of that was done. So it's really on you as the borrower to certify that everything that you're providing your lender is truthful. And then also too, when it comes to the safe harbors, you're initialing, off on one of those, that you fall under one of those. It's not something that your lender is necessarily going to be checking, because, they're taking your word for it in that sense. So just to give you a rundown of what the basic process of forgiveness is. So you as the borrower, you're going to complete the forgiveness application, whichever one you end up needing to do. Also, depending on what lender you're working with, they may have you do it electronically. I know a lot of our lenders are working with like third-party vendors to come up with an electronic version. So you might be directed to go directly to their site to input all of that information. So just make sure you connect with your lender. They'll be able to tell you what format they want it sent, whether it's paper version or having them utilize whatever tools they have on their own website. Once the lender receives the full application, so that's including any supporting documentation, which is mainly your payroll supporting payroll documentation, and your documentation that shows how you utilize the funds for non-payroll expenses. So they'll review that documentation. They have up to basically 60 days from receipt of that application to submit that to the SBA. So the SBA has their own electronic forgiveness portal that the lender has to submit all this information into. So that's why your lender, this is a totally new program to us at the office. It's a totally new program to your lenders. So, just try to work with them as best you can, because, they may have to grab additional documentation based on the situation, and that's okay. It's just, it's a new program for everybody across the board. So it's still, people are still trying to figure that out as they go along. And it just opened up, I think it was August 10th when the portal opened up for the lenders. So once the SBA receives that, the SBA itself will have up to 90 days to remit the final forgiveness decision. So, and then what the SBA does behind the scenes is they're going to be looking at just a couple of things, making sure that the math was correct, the information that was submitted was correct. If there was any questions about how the funds were used, they may put that into a review status, and your lender may have to get more information based on what the SBA reviewer requires. Also, too, they're going to be checking to see if you did get an EIDL advance. So that could have been anywhere between $1,000 to $10,000, depending on the size of your business, because basically the way the CARES Act was originally written, the CARES Act was written in a way where even though the economic injury disaster loan is a different loan program, grants to the same entity have to be combined. So they didn't want to basically give two grants to the same entity. So they actually combined that EIDL advance you may have received, because that's the only portion of the EIDL that was considered a grant. They combine that with the SBA PPP forgiveness. So the SBA will actually look, see if that applies in your case, and they'll remit that from the overall forgiveness amount and deduct that. And then once they remit that to the lender, they'll let the lender know what the final forgiveness decision is. If there's any amount owed, your lender will be in contact with you to set up a payment schedule based on when you applied for that loan and what your terms are to pay off the remaining balance, if any. So as far as what eligible payroll costs, and this is where it's really handy to have the instructions for the easy application, because we get this a lot in the office, when it comes to, is this eligible, is that eligible, and a lot of it's written in those interim rules, and trust me, I know I have to read them all the time. It's 23 of them. It can be very hard to find the specific answer you're looking for, but the actual instructions for the application, it's pretty clear what's eligible payroll expenses and what's not eligible payroll expenses. So if you're ever questioning, just go to that, because it's only about 2 pages, and it will give you details of everything you need to know about payroll costs, non-payroll costs, and what you need to retain for your records and what you need to submit to your lender. So it's very, it's a much clearer format than trying to weed through all the interim rules. So, as far as eligible costs, one thing you want to know is these payroll costs have to be incurred during your covered period in order to be forgiven. So, it can't be something that, if your covered period is from, say, the 1st of September, just as an example, the 1st of September to September 30th, you may be able to pay your employee outside of that September 30th window. But if your covered period ended on September 30th, any hours worked after that is not covered. So just keep those things in mind. And that goes the same with non-payroll costs. If you incurred your lease payment during your covered period, that is fine. That's within the covered period window, but you can't prepay on your lease. So say 3 months down the road after your cover period is over, you can't utilize those funds to prepay anything that wasn't incurred during the time frame you had to utilize those funds. So, costs, as far as payroll costs, they include salaries, wages, commissions, that's just, a few of the examples. And then based on what covered period you utilize, I wrote here on the slide, there's maximums per individual employee. So, if you're utilizing the longer covered period, you have that maximum of $46,154. Whereas versus the 8-week covered period, maximum per employee is $15,385. So, I'm not going to go over each bullet because we want to get to questions and things like that at the end. But again, we're going to supply all of these slides to you, and these are all taken directly from the instructions itself. And non-payroll costs, again, make sure that these were obligations that also were in place prior to 2/15. So February 15th, that's a key date. You want to make sure, any sort of utility bills that are covered under the PPP program, those were in place prior to 215. One question that we get asked, you know, a lot was some borrowers have had their lease agreement come up, you know, during the middle of their covered period, and that's fine if you're renewing your lease and it was a lease that was in place prior to 215, it's just renewing, that's still covered. So, you know, I don't want you to worry about that just because it came due or it came up during your covered period. You're still covered, and that goes for all of your other utilities, whether it's a commercial vehicle lease, whatever the case may be. You know, so some of the costs, you know, include, you know, interest expenses on real personal property, rent or lease payments on real personal property, different utility costs. You know, costs can, you know, include past months. So that's key as well. So past months, just not anything, you know, in the future. Payments paid during the covered period include any, you know, can't include any prepayment services beyond the covered period. So again, another thing too, when it comes to the how much can you utilize for non-payroll costs versus payroll costs? Remember, for your opportunity to be fully forgiven for the loan, you have to at least spend at least 60% of those proceeds on payroll. So that means no more than 40% should be utilized on your non-payroll costs. So as far as, you know, this next slide, this is going over just some safe harbors when it comes to maintaining your full-time equivalents. So when it comes to maintaining full-time equivalents, you know, you can utilize, you know, different covered periods, you know, as your reference point for your own business. So whether that was, so this was initially during your application process. So whether you utilized, you know, the 15th of February of 2019 through June 30th, 2019, or you could utilize the first couple months of the beginning of this year. You know, for seasonal businesses, they had, you know, basically a 12-week consecutive period of any time between, you know, it was I think somewhere like May through September 15th. Also too, you know, when it comes to forgiveness, you know, they'll reduce things proportional based on, you know, percentage reduced on your FTEs. So, you know, that's, but again, the safe harbor is being put in place. If you can answer one of those, you know, just because you had to reduce hours on your employees, say for reasons, maybe they have to, you know, help their kid with child with school at home, and they can't come in on a 48-hour basis, and they could come in on a 30-hour basis. Make sure you're documenting that, because you're still covered under the safe harbors as long as you have explanations for those. If you just let everybody go during your covered period and you know, you only maintain half the staff that you said when you had when you originally applied, and there was no documentation on why that staff's no longer there, that's when you know you might be docked or reduced on your forgiveness amount. So just when it comes to maintaining FTEs, make sure you're documenting every situation for your employees. I know, you know, that could be a bit of a pain, but, you know, at the end of the day, really during this time period, you know, when it comes to HR issues and things like that, you always want to probably maintain that information anyways, because there's so many things that are popping up now with health reasons and whatnot. So again, too, when it comes to salaries and wages, I won't go over, you know, each bullet point, but a big thing is trying to avoid reducing your employees' salaries more than 25%. If it's reduced more than 25%, that's where the SBA, you know, and no safe harbor is in place. That's when the SBA will reduce the forgiveness amount. But like I said earlier in the presentation, when it comes to your employees that may have made more than $100,000, it was a program requirement from us that you reduce that salary when you were factoring in your calculations for how much you could qualify for the PPP. So do not include that in your percentage amount when you're looking at, well, which employees did I reduce more than, you know, 25% or more. So documentation required to meet the safe harbor. So, you know, what's one good thing about the safe harbor, and I tell everybody, you know, when it comes to asking for forgiveness, you know, I feel like there's this general rush in the public to get that application in, because, you know, either they just want to get it off their books, or you know, they just want to know what the decision is. The safe harbor is put in place, gives you till the end of December to rehire and restore salary and wage levels. So, you know, I suggest taking your time when it comes to this, because, you know, if for one reason or another you couldn't meet those safe harbors during your covered period, you still have till the end of December to restore your salary and wage levels. So, you know, you also have the time frame when it comes to the deferral period, that 10-month time frame after your covered period is over, before you're even required to make any payments. So they're really, you know, I just highly encourage, you know, not to always rush through this process, because it can be a lot to take in. You want to make sure you have all of your documentation in line when you come when it comes down to forgiveness. You know, seek help through resource partners and other individuals who may be able to help you, whether it's an accountant you're working with, a business advisor, or whatnot. So definitely, you know, take the time, ask the questions, you know, before you submit your application. So a couple of things you want to look at, you know, make sure you document, like I kind of briefly said before, is document good faith offers to rehire and employee declines, because we all know, you know, during this period when it came to unemployment, you know, there was, you know, added money, added funds to unemployment to help individuals. So depending on the situation, you know, maybe it benefited that certain employee to stay on unemployment based on the income they were receiving. But you as the borrower, and I know that can be, you know, a pain on your end because you're trying to get them, you know, back into the workforce. So as long as you document things in writing, you offer the job, you know, you maintain records of the rejection, and you're notifying unemployment office within 30 days of the employee rejection. You know, you're covering yourself as the employer. So, you know, that's very important. Also, too, you want to make sure when it comes to headcount situations, there's a lot of different reasons why your headcount changes. You know, some outside of the COVID issues, you know, you might have to fire someone for good cause. You know, that those are, you know, things that happen, you know, are going to happen in general business regardless of the pandemic. So, you know, just document that. Any sort of voluntary resignations, retirements, things like that are going to still happen. You know, requesting reduced schedule, like I talked about a few times already. So all those things, just make sure that you're documenting that, so you know, in case, so you know that you meet those safe harbor requirements. So, you know, as far as forgiveness steps, you know, for you as the employers, you want to make sure, you know, when you're looking at the application, you're covering all your bases. And like I said, we're going to touch upon in the last few slides, you know, just some resources that you can utilize to help you through this process. Because I know a lot of times it's going to be hard for your lenders to sit down with each individual and go over the full application. And that's why a lot of them are seeking help from third-party vendors to do this electronically. So there may not be someone that's, you know, a branch manager or a business development officer that's going to be able to go through the numbers for you, but the SBA works with a lot of different resources that can help you with that for free. So we'll go over that shortly. So, you know, a couple of things you want to be reminded of: you want to add the total eligible payroll and non-payroll costs incurred and paid, you know, during your covered period following your disbursement of funds. You want to calculate any reductions in payroll greater than 25%. You want to reduce the total eligible expenses by any payroll reductions if it applies, if a safe harbor was not met. You want to calculate any percentage decrease in your FTEs from a 24-week covered period to your comparison period, and apply the decrease in FTEs to the total eligible expenses. And then, you know, at the end, and this is right on your application, you want to calculate whether the payroll costs are at least 60% of eligible payroll costs. And I said at least, meaning that's the benchmark, but you can certainly use more funds to your payroll if you choose to do so. And then this is just these next few slides. I'll roll through these quick so we can get to questions and things like that. Because this is just a breakdown of what the different components of the application itself. And we feel most of this part it's self-explanatory. Your business, legal name, your address. Make sure that when you're putting in your business information, it's the same. It's the same information that you provided during your application process, because that's going to be key. Because if you when you applied for the loan at XYZ Bank, if you abbreviated on your business, that lender may have abbreviated your business when they submitted the application to the SBA and SBA's core systems. So you also want to keep that the same when you submit the forgiveness application. So there's no, error issues that pop up on the portal side, on the electronic portal side of things. So just make sure, when you are filling out the application, you keep it relatively the same thing with the primary contact information, the email addresses, all that stuff. Try to keep it the same you had when you applied initially for the loan. Again, these are just, disbursement dates and things like that. So like some of these questions, if you don't know them offhand, so say like PPP loan disbursement date, maybe you forgot what date the funds were dispersed to you, you may be able to just look on your bank statements or go online and look at when the funds were electronically funded into your account. You could probably call your lender for that too. They should be able to look that up if they provided the loan to you. If you're for the EIDL advance, if you're not sure of the amount you received for the EIDL advance, one thing to note, that came as like a separate electronic deposit, and it should say from the Treasury, it would be anywhere from $1,000 to $10,000, depending on when you applied. It could have came anywhere from April all the way till now, because I mean they could still be getting them, even though the amount of funds for the advance have stopped. They may have given out some recently for the funds they had remaining, but you should just see that small amount separate. It didn't come with like a notification from the SBA or Treasury. It just came as an automatic deposit. So I would just run through your last few months of bank statements, and if you see that and it says U.S. Treasury, that's the EIDL advance, especially if you know you applied for it. Also too, like application numbers, things like that. If you're not aware of that, you can contact the disaster center. They should be able to get that for you. But usually too, if you did apply for the loan, you probably got emails and closing documentations on that. So it should be right on there. And then, on the application itself, it's going to ask you what covered period you utilized. So one thing that comes into play too when it comes to the covered periods, you could utilize what's called an alternative covered period, and that's based on your payroll. So you may have had the funds dispersed, say September 1st, but you pay your employees that following Thursday, maybe it was September 4th. So you can start your actual covered period on the day you actually paid your employees. So that's what they consider that alternative, even though there's that little gap of when you got the funds. It's that the program allows you to use the covered period based on when you actually pay your employees. And then this just goes over line by line of what you should be entering into the calculation. And then basically at the tail end of it, it should give you the amount that it will state on what your forgiveness amount will be. And like I said, the lender's not necessarily going to verify everything. They're going to verify the math. They're not necessarily going to do a fine comb everything, but they're going to submit that to the SBA. The SBA is also going to go through the math and make sure everything, is proper and is calculated correctly. So if there is any adjustments, the SBA will let the lender know. So, just, a couple of things too at the end when it comes to owner's compensation, replacement, this really has to do with, your sole proprietors and things like that. So when it comes to, the most that you can receive in forgiveness based on the covered period, as you can see, if you used an 8-week covered period, it's $15,385. If you use a 24-week covered period, it's $20,833. And then this is just a listing of what payroll documentation you may need to submit to your PPP lender. So not all of this may apply to you, but I would assume most of these forms may apply. You know, if you didn't utilize the funds for you know, certain aspects, it may not. But you know, again, where you can find this information, we're going to send this out to you ourselves, but also this is directly listed on the instructions for the Easy Forgiveness application itself. So, you know, if you need to double check, do I have all these things in place? Do I have my bank statements or my third-party payroll service provider reports? Do I have payment receipts or canceled checks, things like that? You know, make sure you have all of this in place prior to submitting an easy application. Like I said, you have plenty of time to submit that. So, you know, don't try to rush through everything if you don't have to. And non-payroll documents, again, this is right on the instruction. So this may or may not apply. It just depends on if you use some of the funds to pay for these different types of expenses. So mortgage interest, rent or lease payments, things like that, utility payments. Make sure you're keeping copies of all the invoices, all the lease agreements and things like that. Those are going to be required to submit to your PPP lender. And then, like I said earlier on the presentation, where can you find the most accurate information? SBA.gov, the coronavirus relief options, or treasury.gov. They have their own section that talks about coronavirus relief assistance for small businesses. So those are the two links that I listed there for this presentation. Those are your two most important links. I know, you know, there's a lot of different articles out there. There's a lot of media outlets talking about the programs. There's a lot of people saying that they're experts about the programs. I highly encourage you to make sure that any information you receive, it's directly from these sites, because this is where the policies are driven to, these two sites. So, you know, and again, if you have any questions for us, you know, on what you've read, please feel free to reach out to us at any point in time. We'll try to answer as best as we can for you. And then another thing, when it comes to needing help for, you know, to get this application submitted and making sure you have all your ducks in a row and things like that, the SBA partners with a variety of resource partners that can help with so many things that include the PPP forgiveness process, but as you can see here on this slide, a variety of other technical assistance for small businesses. And we really want to make sure that you're aware of that. So whether it's SCORE, the Massachusetts Small Business Development Centers, the network, the Center for Women in Enterprise, your Veterans Business Outreach Center, if you have not heard about these organizations, please look them up, because they are there to help you. They're funded by taxpayer dollars. They're here to help you free of charge. We have a lot of different counselors and representatives from these organizations that are scheduling appointments to help with the PPP process. And they can, like, you know, this is just a small bullet point list of other things that they can help with, you know, because there's, you know, it's a small business. I'm sure you're not only working on the PPP. You might be looking ahead to the future about government contracting or needing additional lending for expansion in the future. Our resource partners that we have, you know, here in Massachusetts and throughout the United States can help you with this. And again, here's just a rundown of their different websites. So again, you'll get this presentation, so you'll have a link to every single website. Like, for instance, the Massachusetts Small Business Development Center, they have different locations throughout the state. So they have regional offices, and, you know, obviously with the pandemic, everything's done virtually. It's not too much face-to-face, but, you know, whether you're up in the North Shore, you're down the South Shore, you're in the Boston area, there is a regional office that will handle your situation and help you through this process. All right, so I'm going to turn this over to my colleague, Caroline Williams, because we here at the SBA, you know, we talk a lot about PPP, we talk a lot about it, you know, the economic injury disaster loans, but we're still running full throttle on
Yeah.
all of our other programs, and we want to make sure that you all are well aware of what else the SBA has to offer when it comes to programs and services. So Caroline, if you want to take it away.
Yeah, I'll make this real quick because I know we've got a couple questions in the Q&A area. But yeah, like you said, everybody is focused on PPP and EIDL right now, but we do want to let y'all know that our regular programs and services are still, I guess, operational. I'll find a synonym for that later. This includes loans through our lending partners, our regular 7A loans, the 504 loan program, and microloans. This also includes federal contracting. There are different programs for that as well for historically underutilized business zones, 8A firms. You can become women-owned certified, service-disabled veteran certified, etc. And the surety bond programs are also still operational. You can find more information for those on the website sba.gov/MA under the tab Funding Programs. And then research and development grants are also available for those who meet qualifications. And again, the resource partners that Dan has mentioned before can help you with those. And these grants are sort of designed to form a relationship between the federal government and different fields in tech, where the government sees that this work will benefit both the economy, the business, and the government. So it's like a big symbiotic relationship altogether. And so you can see those, there's my notes. You can see those opportunities and apply at sbir.gov. And that is our regular programs. And I know that Dan, you wanted to say something about the contracting event coming up.
Oh yeah, I got to throw in a plug because very, very important. If you haven't gotten the email from myself or through another connection over the last, I think I just sent it out within the last few days. Our office is going to be conducting a whole webinar series during the fall months that we're looking to grow into a year-long campaign for federal contracting programs. And we're also going to include state level and your local city and town level into it as well. So our first webinar series that's going to talk to businesses about what it entails to contract with the federal government and what all the benefits and the opportunities that are out there, all the tools and resources that you would need to see if you're viable or capable to do business with the government. We're starting that webinar series next Wednesday. Yes, Wednesday, September 30th. Yes, Wednesday, the last day of September at 11 o'clock. If you haven't gotten that information, I'll send it out to you. Or, I'll send it out to the chamber and make sure that you guys can sign up. We have an Eventbrite sign up registration. It's free. The first webinar is going to be about an hour and a half. We're going to discuss, the basics of government contracting, talk about some successes. We're lucky in our office. Our deputy district director, Peter Kontakis, he actually has a heavy contracting background. So he's very knowledgeable about it. And then we have the head of our contracting team, Nadine Boone. She's got a wealth of knowledge, whether it's the different certification programs like your 8A program, which is your disadvantaged business, or your hub zone, or your women-owned business certifications. Those can all really benefit you as a small business. We're looking to really try to make sure that there's all the, let small businesses know there's all these opportunities to expand your customer base, because we don't know, right, what's going to happen in the future. Unfortunately, this pandemic happened, and that made a lot of people assess, where they can get their business from, right? Because not everything is going to go back to the same right away, as we all know. So where are those other business customers, where are those other relationships that you can start forming to grow your business are going to come from? And federal contracting programs are a great way, to assess for your business if that's something, right? And the government actually is your largest purchaser of goods and services. And I think that we spend about $500 billion a year, I think it is, on goods and services, and 23% of those have to go to small businesses. So that's mandated by Congress. They have to go to small businesses. So those are opportunities that we want to make sure that you folks know And just like Caroline was saying, all these other programs, surety bonding. If you're
Mhm.
an electrician, you're a plumber, you're a general contractor, you're probably familiar with surety bonds in general, because you might have had to work on a building, a hotel, whatnot, and you may have had to get certain bonding for different issues. SBA partners with a lot of different insurance agencies throughout the state and throughout the country to help lower the costs and also increase the amount of surety bonding that you can, so you can apply for bigger jobs. You keep those in mind. Those are great programs, and we're going to touch upon that, and it's going to be a great series. We're going to teach you from A to Z about government contracting. So by the end of it, you should be well aware whether your business that's something you want to entertain for your business.
Yeah, and all of this again can be found at sba.gov/MA. It's a pretty user-friendly website. It's got everything up at the top, and there's drop-down menus, and they're all pretty clearly marked. So, yeah.
All right. So
All right.
I think we'll go into questions, and I'll do just a stop share to get off the screen there.
Okay.
And let's see. All right, so I'll look at the questions here. I'll try to read them out if no one minds their question getting read. I won't mention names, so okay, so first one, I got an SBA loan. Is that different from a PPP? It could be. So the SBA has several programs that we've continually run that have been around for ages, whether it's the 7A program, which entails a lot of different sub-programs such as SBA Express, 7A Small, Capline, different things like that. Also, we have the 504 program, which is mainly utilized for expansion on a business, purchasing commercial real estate or big pieces of equipment. And we work with lending partners on that as well. And then we also have like the microloan program, which are typically for loans to, say, disadvantaged businesses or new businesses, women-owned businesses, minority-owned businesses. And typically those loans deal with $50,000 or under. And we have about eight or nine microlenders that work on those here in the state of Massachusetts. But the PPP, it's its own program itself. This was directly for economic relief. This was put into the CARES package. So this is, and you could have an SBA loan and a PPP loan. You could have a PPP loan, an economic injury disaster loan, and a SBA, normal SBA loan, whether it's a 504. So yeah, they are different, totally, different programs, and typically the PPP is really for economic relief, where the other ones could be just for normal business operational purposes. And then let's see, I got a bill for installment amount from SBA, says option to pay, but can start repaying. Should I pay that voluntary payment? So that could be a couple things. So I know recently the Disaster Center has sent out, so if you applied for an EIDL loan, they have started to send out, it wasn't a bill, but it was like basically the payment schedule and when your next payment is done. So the EIDL loan itself had a 12-month deferment. So you're not required to pay for the first 12 months of the loan, but they have sent out like just a notification of what your payment's going to be and when it's going to be, the first one's going to be due to a lot of people, because I've seen that recently from a few borrowers. But this may also be, I don't know if the person's referring to, they may have had an SBA loan already. So as part of the CARES Act package, if you had a current SBA loan, so through the 7A program, 504 micro-lending program, you were, if your loan was considered fully dispersed and you were paying on time, there was debt relief that was given to all these SBA borrowers. So basically the SBA and the Treasury, they were picking up the payments for your next 6 months of payments on your loan. So I think banks initially depending on when your payment was due, I think when initially the debt relief payments started, they may have sent some notices stating you could, still pay your amount. We can reimburse you. We can apply your April payment towards principal or different things like that. So that you may be talking about that itself, but that's something, Bill, if you want to send offhand, I can kind of better assess maybe, so we can make sure we're on the same page. Also, too, let's see, we got, when is the application scheduled to come out? So if you're talking about the forgiveness application, the forgiveness application has been out for a few months now. So again, those websites, or if you just type in treasury.gov or SBA.gov, go to the coronavirus debt relief sections, you should be able to find those applications. But just one thing I would just want to keep in mind, talk to your lender about that first, because a lot of the lending partners they're setting up an electronic version of it to submit through their own bank websites. So check with them first, because you may end up filling out the paper application and then they're not going to accept it. They want you doing it electronically. So double check with them, before, or download that, and you can just have it, as a reference point as well. Let's see, is there a penalty if we can't submit the PPP forgiveness application by the deadline? So they haven't come out with guidance on a penalty per se, but what you will have to do is you'll end up paying an amount based on your full PPP loan, because no decision was ever rendered. So if you have until from 10 months after your covered period ends. So, if you can't get it, so that's, over a year if you're using a 24-week covered period. If you can't get it in, by then, basically payments are going to start kicking in, and they're going to kick in on the amount that you actually had dispersed to you, when, it wouldn't make, any sense to, to do that. So, for that, if you really are running up against the clock, connect with your lender on that, and I would really highly suggest getting that in, before that 10-month deferral period, because the lender is required to start a payment schedule on you if they don't get it. But I don't think there's going to be like an additional penalty or anything like that. We haven't gotten any guidance that suggests that. So as of right now, I wouldn't foresee any sort of like additional like penalty, like a late fee or anything like that happening. So next question, will they subtract the funds I received from the disaster loan from the PPP? Not the EIDL loan itself, just the advance portion. So if you applied for the economic injury disaster loan, so that was an application that was done directly through SBA.gov. So that's the one program where SBA is actually the lender, where the PPP and all of our other programs, it's done through our lending partners. They're only deducting the grant portion, so that advance portion. So that was something that was written, you have to read through the whole CARES Act, it's long. Basically, the CARES Act stated that no one entity can garner more than one grant, so they have to lump it all together because it's two different programs. So they factor that in to the forgiveness decision. So then next question we have is, this was, I think Bill was responding to my initial. So disaster loan. So yeah, Bill, I think the only thing that I've seen, and maybe if you want to shoot me an email, offhand, the only thing I've seen from the economic injury disaster loan is they've sent out like just a pay statement, and it says on there it's not a bill, but it's just letting you know what your payments are going to be, and it probably has a date somewhere, I would assume like between April and sometime in the summer of 2021. That's the only thing that I'm aware of. So one thing, just so everybody knows, is the field offices, which myself and Caroline work in, and and the disaster center, they're really two opposite ends of the house. So we really have to go and ask questions to the disaster center versus us. We don't really get all of the information. So if you are being supplied something that you're unaware of or you have questions, shoot it over to us and we'll try to connect with the team down in the disaster center, because we actually don't get a lot of that information ourselves. They kind of keep it solely to the disaster center, so they don't disperse all of that information out to the field offices. So, but Bill, certainly send it my way, and I can double check that for you. And I think that's it on my end.
Yeah, I don't see anything else.
All right. Well, thank you so much, Caroline and Dan. A couple of notes before we wrap up. So if you're on the call and you're not a member of the chamber yet, please send me an email so I can talk to you about what all of the benefits are of joining us. My email address is thais.demarco@malgbtcc.org. I'm going to pop that into the chat, actually. Maybe, if I can. There we go. Okay. So I'm going to do that so you all have my email. Sorry for the big Thais face. All right. So that's my email address. And then the other thing is, check your member email that I sent out yesterday for more information on the federal contracting webinar. That's the word, the thing we're doing right now. So check your email, the one that I sent out yesterday. There's a link in there for you to register for that presentation that's coming up next Wednesday, the 30th. So that's it from us. Thank you again to everybody for joining us. Thank you, Caroline. Thank you, Dan, for being here and for sharing.
Yeah, thanks for having us.
Yeah, thank you.
Anytime.